Let's talk right now about what is the latest on this money meltdown. Asian stock markets, as Maggie just suggested, are not quite in free fall, but in trouble this morning. Tokyo's Nikkei lost nearly 5%. Hong Kong's Hang Seng hit a 2-year low. The Federal Reserve meets today in Washington to consider cutting a key interest rates. And oil prices continue to plunge because of a slowdown of the world economy. Crude dropped below $92 this morning overseas trading. Let's go to early show national correspondent Jeff Glor, who's at the New York Stock Exchange with more this morning. Good morning, Jeff.
Hey, Harry, good morning to you. Much of the focus here on Wall Street this morning remains on AIG, that giant insurance company that is already getting up to $20 billion in help, but may need quadruple that to survive. On Wall Street, a wild weekend became a messy Monday. Nervous investors pulled money from the market. The worst Dow drop since 9/11. Nearly $700 billion in losses for government pension funds, retirement plans, and investment portfolios that ordinary Americans rely on.
In the short run, adjustments in the financial markets can be painful, both for the people concerned about their investments and for the employees of the affected firms.
One of those firms, Lehman Brothers, now the biggest bankruptcy filing ever after the once mighty brokerage firm collapsed under the weight of $60 billion in bad investments. A company that started the U.S. cotton trade before the Civil War and financed the railroads that built our nation now could leave 25,000 workers on the wrong side of the tracks.
I'm starting to find another job. I have to.
It's terrible. It's terrible. People are grabbing all their stuff.
Meanwhile, the giant insurance company AIG, its share price down 92% this year, got a $20 billion lifeline from New York State, which it may need to keep from sinking.
AIG is next. It's an insurance company that decided to get involved in this kind of banking when it's not a banker.
Banks in general are getting beaten down, and the main culprit remains the harsh hangover from a burst housing bubble.
Until we stem the housing correction, until the biggest part of that is behind us and we have more stability in housing prices, we're going to continue to have turmoil in the financial markets.
There is some discussion this morning that the company Barclays would buy part of Lehman Brothers, which could save 10,000 jobs. At this point, it appears the Fed is trying to resist the urge or the calls to cut rates again. But at this point, there may be no resisting the urge to increase regulations here on Wall Street. Harry?
Jeff Glor at the New York Stock Exchange. Thanks.